All right, let's recap our big story at this hour, and that is breaking news that Hewlett-Packard and 3Com getting together. HP says it's buying 3Com for $7.90 a share on an enterprise value of $2.7 billion. For more on this, let's head to Courtney Donohoe. She's down in the newsroom. You know, Courtney, we've been talking all day about technology companies having an awful lot of cash on hand, and they can do deals, and that's exactly what we're seeing here.
Exactly. We just saw this deal just right now coming across the wires. Now, this is really interesting. One headline just came across that 3Com trading surged it to its highest in 26 months before the bid today.
Makes you wonder here.
Makes you wonder what's going on and what people know ahead of this bid. But I want to go over some of the deal statistics.
Because there's a nice little premium on this deal, right?
39% premium on this. So $2.7 billion, that's $7.90 a share. The 3Com, this would get them in as they're a networking equipment maker. This would definitely help the company too in expanding out within this area.
And Hewlett-Packard made some comments about why they like this. I mean, this made sense for them in terms of their business model.
Yeah, because it would definitely give them an outlet within China too. And they also said that China has been a big growth area for the company. We saw this with their forecast and with their earnings. They said that this is a very important area to the company. They did come out with their fourth quarter results too. Prelim results coming in better than expected.
Right.
Their outlook too coming in better than expected. First quarter adjusted EPS.
They did talk, though, about the deal being somewhat dilutive, correct?
Yes, the deal would be dilutive for the company.
All right, interesting. So maybe not surprising to see this deal, or maybe it is. I mean, it wasn't one that we've been, hearing talking, people talking. We heard about like smaller deals, smaller companies potentially.
Exactly, but this is one that wasn't really on the radar. But when you look at call options trading, I guess it was on some of the radar of some people.
Exactly. All right. So again, $2.7 billion, $7.90 a share. It's a big deal in the technology sector. There are a bunch of headlines that came from Hewlett-Packard. You mentioned their earnings. Anything else we kind of need to know when they talked about their earnings here? Because they did talk about the first quarter. They did talk about it being dilutive.
Well, first quarter adjusted profit supposed to come in between $1.03 and $1.05 a share. Analysts were expecting $1.03 though for the first quarter. Now the fourth quarter revenue that's coming in at $30.8 billion. That's a lot higher than what analysts were expecting. $29.83 billion too for that. The company reporting also fourth quarter profit, $1.14 a share. Analysts were expecting a little bit less, 3 cents less at $1.11. But they were saying that the forecast, this deal isn't part of what they were saying with the forecast.
It's interesting, well, it'll be curious to see what other technology companies kind of wake up and look at this deal, whether or not there's some competitors out there that might say, well, maybe we need to do some kind of deal in this space as well. Yeah,
because the space is getting smaller. I mean, we were seeing
a lot of consolidation.
Exactly. Applied Materials, we were talking about them a little bit earlier. Their earnings came out a little bit earlier. One of the things is that it's gotten smaller within a lot of the businesses. So they have to be smaller in order to get a little more competitive out there. So that's so a lot of people are looking to either make their business smaller or look to talk to other people, look to build out their business.
Now, we haven't heard anything about job cuts or anything. I mean, obviously it's a deal and who's in charge, obviously HP here, but nothing else in terms of how this might break down as we see a consolidation of these two businesses.
No, nothing else with that so far, but again, this is so preliminary. We're looking through this deal at this point, so it's something that's, I mean, just on the radar moments ago. So.
I do want to recap it with you because if someone's tuning in, I mean, we saw the shares were halted just before the close of trading there, so let's recap it. Again, it's what, $2.7 billion?
Yeah, $2.7 billion, $7.90 a share. 39% premium, so a nice little premium on this deal, and it would allow them to expand out in other directions, allow them to expand into more into China for growth. So we're going to continue to monitor this deal for us for the rest of.
And we'll throw in that HP also boosted their forecast because we got a lot of their financials as well.
Exactly.
All right, got it. Courtney, thank you so much.